Hello, everyone. Thank you for your patience. If you have been watching me flip around here, my name is Pierrette Rouleau, and I am the owner and broker in charge of Rouleau Real Estate Group. I operate a boutique real estate firm which serves the mountains of North Carolina. I'm really excited as I push farther and farther out into my boundaries. So I'm really comfortable in about 8 to 10 mountain counties now. And I'm also really comfortable in the city of Asheville, and in particular West Asheville, where I live, love, and work. So I have been called upon for a couple of months now to do an update on the real estate market. And these do take me a little bit of time. I am a researcher at heart. And so probably this is a good time to do one for us. So let's take a look at what I have prepared for us today. And so I want to start out with the Asheville update. And as we get to the end of the conversation, and I apologize that this is going to be so nerdy, it is going to be nerd alert, but I really, really jam on this stuff. I really jam on an open heart and helping people transition in their lives, but I really love numbers. They're kind of fun. So this is the Asheville update. And so I always like to start here, and I like to preface what I have to say about stats. Because I always pull them from the same system and use the same setup. And so, because when you pull stats from different outlets, your numbers can skew just a little bit. So this is single family and condos 10-year average in the city of Asheville, so 2010 to 2020. And so what you want to see, and so this is 2010 here, and this is at the bottom. This is that nadir, and I have a chart that I will show you later on about the long cold winter in real estate from '08 to really 2012. What we see here is that we did have a little bit of a slowdown in Asheville, not really a slowdown, just kind of a steadiness, 382 average price per square foot, 390 here, 387 actually went back a little bit. And then last year, 2020, I think this is really important for us to understand. Yes, last year was an anomaly. It is still, the effects of the pandemic are still playing out, of course, in many arenas, and they are still playing out in the real estate world as well. What some in the market call this a great reshuffling, as people have both the technological ability and wherewithal to work remotely. They are interested, our consumer public, you are interested in moving and being with multi-generational family members. You're interested in more outdoor space, of course. You're interested in opportunities to get outside into nature and have exercise. And those things are not going to change. What we do see is this is a pretty high increase. This was about a 15% increase in the average price per house. The national market expects our average price per house to decrease to about 6.5% this year. So that's not bad. So what we want to see is Asheville is an extremely strong market. And so you want to know this both from the buyer perspective and from the seller perspective, because this conversation today is really for both of you. We are in desperate need of inventory. And what I want to say to you is, I know I'm a real estate broker, and I know that everyone has a jaundiced view of real estate brokers. But what I want to say to you is I am a researcher, and I am ethical, honest, hardworking. I have a wonderful sense of humor, and I'm going to tell you the truth. The only reason that the realtor exists is for consumer protection. And so if we are not telling you the real facts about this market, the market in the past, and where we expect the market to go in the future, then you need to find someone you trust. Because this is important. So people are waiting for another housing crash. That is probably not going to occur. And again, I base my information in both on my analytical ability and well as the reading that I do as well. So What we want to see is there's a 32% increase in the average price per house in the last 5 years. New listings are on pace with January of 2020. So this year, January 2021, today's January 31st, our new listings are on pace. So we are beginning the market as strongly as we did in 2020, and that's winter. And that market has trended just the same. What I also want to say, of course, is that last year in March of 2020, our spring market was completely up and running. And then the pandemic hit, which completely shrunk, collapsed the ability for buyer demand to be fulfilled. And so when those current buyers were waiting in the spring, and then the additional buyers who came out into the market because of the great reshuffling, those things put enormous pressure on our housing market, both locally and nationally. And one of the things that I always want to say is that when you compare a chart, when you overlay a national housing chart with Asheville's chart, you are going to get a similar chart. And that's good news. That's good news to know that that our city is large enough and that the area around our city is engaging and attracts people. So we have a 3-month supply in the city of Asheville. That is definitely a seller's market. New construction is a factor. We have more new construction. We need more new construction, and new construction will not solve our problems of a housing crisis. And so we do need sellers to come on out and grab that remarkable equity that is there for you. And so our average days on market in Asheville is about 44 days. It's actually a little longer right now, but that's January too. Or these are, I'm sorry, let me refrain. These are summaries. So what I wanted to show you, so the next thing that I want to do is I want to drill down into West Asheville a little bit. And as I drill down into West Asheville, I'm going to keep commenting on both this market and the other market that I am heavily engaged in, and that's the high country real estate market. But I live, work, and love in West Asheville. I have an active listing listed in West Asheville. So part of my job as a listing broker is to educate the public about the loveliness of the community of West Asheville and both its market, its real estate market, and how it's such a wonderful market to buy into. So this is our area. Some might argue about the boundary lines that I have for West Asheville, but this pretty much includes what we think of as West Asheville these days. And so now let's continue this conversation. Remember that in the city of Asheville as a whole, we had a 32% increase in the average price per house in the last 5 years. In West Asheville, we have a 30% increase, so essentially no difference. Now, here's an interesting stat. Remember that, so new listings are down 10%. Okay, so what this means is that we're having a contraction in the number of new listings coming on the market. Now, we have such pent-up demand that we need more listings to come on the market. And so in West Asheville, we only have 2.5 months of inventory, and it's even shorter, 36 days on the market. And so again, this chart, if you went back and looked at the 10-year Asheville chart, very similar. 2016, 2016, 2017, 18 and 19, and then 20. You see this big jump from 333 in the average price per house to 376 in the average price per house, right? So that's significant. All right, and so now this is fun. So one of the things that you want your realtor to do for you, and we, this is our work. This is what we do. And so we want to, of course, convey to you as the consumer what our value is. And everyone, if we're listing and selling your home, everyone should be operating at the top of their digital and video and visual marketing game for you. If they're not, go find someone else. That's very straightforward. But what also needs to happen for you when you hire a listing broker is that they help you understand where to price your house, to price and to understand your market, the surrounding market, and the pressures that are happening on your market, both positively and negatively. And honestly, that's what a buyer agent should be doing for you. Every buyer agent should be having all the inspections done for you. They should help you negotiate. They should be doing all of those things. But for a buyer agent to really be her worth in gold is to be able to also help you understand financially what market you're buying into in terms of your community. Where are you going to get your hair done and grocery shop and get your car worked on? These are all the things that we help you with. But stats and research is extremely important in understanding your market. So I was really curious because my home, not my home, but a home I have listed, 120 Johnston Boulevard. It is an adorable 950 square feet house, but then there's also an additional 150 square foot gorgeous sun porch. It is 269.9 and it's 3 bedrooms, 1 bath, and it's been just sweetly remodeled. And so what I want to do, this is part of my task, is to educate the buyer so that they will know about this home. And so what I want to say was it's so interesting to me. Let me find my, there we go. Okay, very good. Okay. Okay, so here are our stats. So west of Haywood. So this is my west of Haywood. All right, so we had West Asheville and now we have west of Haywood. So what I believe is happening is that, let me go back to this map again. What I believe is happening is that West Asheville is now starting to track over just across Haywood Road and Patton Avenue, where Haywood becomes Johnston Boulevard, and Lucerne Park, Echo Hills, Wilshire Park. Those are all becoming highly desirable areas. They were. When you drive up in these areas, they have lovely up in Echo Hills and Wilshire Park. It's a little more low density zoning, so 6,000 square feet per lot. Just a really sweet section of West Asheville that's starting to pull over across Haywood. And so I was really interested to see how those prices are different. And so I wanted to capture Echo Hills, Wilshire Park, and Lucerne Park and see what's going on. Very cool. So there's a 24% increase in the average price per house in the last 5 years. Now, what I want to say is that this is a moving progress of buyers. So West Asheville, every flag lot is getting built on. There's still places to build in West Asheville proper, but moving just across Patton Avenue onto Johnston Boulevard and into those 3 neighborhoods is just ideal. The people with whom I am working there, both my listing at 120 Johnston Boulevard, again, it's just the sweetest little house, and I hope everyone will come see it. And then I have the possibility to list 2 more homes that in that area very soon. And so it was incumbent upon me as a broker to really start to understand that market really, really well. So what we see is the average price per house has slowed just a little bit as you move west on Haywood Road and cross over Patton. So it's a 24% increase in the average price per house. But look at this. New listings in this little neck of the woods is down 34%. Now, what that means is that every new listings equals number of closed. Every house that gets listed, it's closing. And so there is a little longer days on market. And I think that's because buyers are, okay, is this a neighborhood that I want to live in? I thought I wanted to live in West Asheville. Well, this Wilshire Park, Lucerne Park, and Echo Hills, they are absolutely the bomb. You can pop right out on Patton Avenue and be downtown in 10 minutes. You can walk to the center of Haywood Road within a mile or a mile and a half. It's just tremendous, and it's more sedate. with larger, more sedate, more neighborhoody. Oh, sorry, that's my puppy barking. He sees children playing. So in talking about, oh gosh, now the kids are playing and the dog's barking, and there you go. Hello, people. Hello, hello. Okay, back we go. All right, so I did want to take a look at national charts for you, just so that you can have a sense, because we all want, oh my gosh, is there going to be a housing crisis? I mean, a housing crash. What is going to happen this year? And so what I want to say to you, a couple of things. I just talked to a new buyer on the phone, and she asked, Jane, do you think I can get that $450,000 house for 400? And the answer is no, right? And so one of the things that's happening is that houses that are overpriced or unremodeled are still staying on the market. So that's number one. So that hard and fast, no, a house won't sell for less is there's a caveat around that. The other thing that we want to point out, though, is that in most cases, homes are selling between 98 and 97 and 98% list to sell. And that's because they are being priced well. And they are selling because this is a significant seller's market. So sellers do need to be cautioned that not every house is going to fly off the shelf. If you are overpriced, if your condition, you can't do anything about your location, you can do something about your price, and you can do something about your condition, right? And so condition, price, location, these are still the three factors for buyers. Buyers will never make the mistake that they made in 05 to 07. This is the 08. This is our significant housing crash. Markets do slow down they do a little correction every 5 to 7, 10 years. But this was a complete anomaly, you guys, the 08 to 13, complete anomaly. And the pandemic is a complete anomaly. And yet we can say, well, we live in a new world, right? But this notion that we have as real estate consumers, that there's going to be a housing crisis, crash, that prices are going to pull back, that blah, blah, blah. These things are no longer as viable arguments anymore, because since this debacle in 08 to 012, the federal government has created all kinds of laws and guidelines and stopgap measures. This kind of housing crisis will not ever occur again. The real estate market is a primary driver of our entire economy, and we need it. So these are some nice stats here that show this is purchase applications totally in the red. I mean, in the green, I should say. This is new housing starts. This is again 08, 09. Now those new housing starts are finally starting to come back. This has been a huge reason for our upturn in average price per house in the last 10 years anyway, because of the lack of new starts and new construction. So here's some things to take away for buyers and sellers. There is going to be low inventory, there will be high demand, and there will be multiple offers. If you are listing your home, you do still want to list it at a price where the moving market is going. You do want to be aware of appraisal, both as buyers and sellers. You want to be aware that the house must appraise, and buyers are not going to overpay and pay an extra $5,000 or $10,000 above and beyond a purchase price for an appraisal. So when we're working in this kind of fast moving market, you need an agent, both on the buyer side and the seller side, to help you understand the math of this process and where the movement is going. So the market will not pay top dollar for overpriced and dated homes, and that has borne itself out. New investor opportunities. So I have worked with 3 or 4 investors over the last several years, and I continue to work with them. The concept of short-term rental, whole house short-term rental in Asheville is over. And the concept of even short-term, whole house short-term rental within 30 minutes of Asheville is pretty much over. And that's because property management fees run 45 to 50% of your gross income. And it's very, very challenging now to find those kinds of investment opportunities. The kind of investment opportunities that we see in Asheville is older homes that in a current rundown condition, historic homes that sell for $300 or $350, and then they're gutted and then they're sold for $700. That's where the investor opportunities are. And transactions will become increasingly accelerated as more and more we turn to technology to facilitate our transactions. Appraisals, I've mentioned. There are some markets that are getting overcrowded. In the fine print, I've indicated a couple of the articles that I have read. So you guys know that I love Lawrence Yun. He is the economist for the National Association of Realtors. And I just find I'm kind of in love with Lawrence Yun. And so this is one thing that he says: there is a high demand for housing and a great number of would-be buyers, and therefore sales should rise with more new listings. We need listings. And so, runaway price per house, the average price per house, just the acceleration of that is not good for the market. It's not good for our neighbors. It's not even good for the investor because you might be a one-off. The market might price you out of investing. And so it's not always good to be in a supply demand where the demand is always so much higher. However, low interest rates, President Biden is proposing a $15,000 new buyer credit, but there aren't enough houses for new buyers to buy right now, right? So this elevated demand without a significant boost in supply has caused home prices to increase, and we can expect further upward pressure on prices for the foreseeable future. Okay, this is very important. Home prices soared 9.5% in November. January over January, our average price per house in Asheville went up about 15%. He believes that it was going to slow down, that the average price per house is going to slow down, to about 6.5% this year. All right, so the average price per house is still going to go up at a very, very pleasant rate of 5 to 6%. Mortgage rates are going to stay right around 3%. And I've lost myself. There we go. And so, everyone, thank you so much. Let me get this back up here just a second. I think we've disappeared. There we go. Thank you so much. This PowerPoint will be available in comments, and it's also going to go out on. It's also going to go out in our newsletter today. And I hope this has been useful and interesting to you. Again, I am Pierrette Rouleau, and I am the owner and broker in charge of my company, Rouleau Real Estate Group. And we serve the mountains of North Carolina as well as Asheville. And I hope that you are having a lovely, lovely day. And thank you so much. Bye now.